Hello learners, welcome to Trade Tactics. In today's video, I'll tell you about a top Ichimoku trading strategy. We won't be discussing the calculations behind this indicator because those calculations don't directly generate income for us. The Ichimoku Cloud is a fully comprehensive trading setup, so we don't need to use any additional indicators with it. This cloud helps us identify the market's trend and momentum. Additionally, it provides specific buy and sell signals. Unlike other momentum indicators like MACD, which can give false signals in a ranging market, the Ichimoku Cloud filters these false signals using the cloud, reducing the chances of errors. When you apply the Ichimoku Cloud to a chart, it might look complex at first glance, but it's actually very simple to use. First, let's get to know the components of this indicator line by line. The first line is the conversion line, and the second is the baseline. These two lines generate buy and sell signals through their crossovers and function similarly to a moving average crossover. Whenever the signal line crosses the baseline from below, it's a buy signal, and when the signal line crosses the baseline from above, it's a sell signal. Next, we have the leading span A and leading span B, which together form the cloud. This cloud helps filter sideways markets and also helps in identifying the trend. For example, if a stock's in a bullish trend, the cloud will also move in an uptrend direction, and if the stock is in a bearish trend, the cloud will move in a downtrend direction. The color of the cloud also helps in identifying the trend. If the cloud is green and the price candle is above the cloud, it means the market is in an uptrend, while if the cloud is red and the price candle is below the cloud, it means the market is in a downtrend. This cloud has its own rules that you should follow. If the candle is above the cloud, you should only take trades based on bullish crossover signals. And if the price is below the cloud, you should only take trades based on bearish crossover signals. If the candle or price is within the cloud, it means the market is range bound, and you should not take any trades. The next line is the lagging span. This is optional in the indicator. Some traders use it and some don't. The lagging span lags 26 days behind the current price, providing a secondary confirmation for trend identification. So, if 26 days ago the lagging span was above the price candle, it means the stock is in an uptrend. If it was below the price candle, it means the market is in a downtrend. Now let's see how to use all these components together to make a trade. If the price or candle is above the cloud, and at the same time the conversion line crosses the baseline from below, you can buy here. For a second confirmation, you can use the lagging span. If it's above the price candle 26 days behind, it acts as your second confirmation. Similarly, if the price or candle is below the cloud and the conversion line crosses the baseline from above, you can sell here. For additional confirmation, check if the lagging span is below the price candle 26 days behind. If it is, this is your second confirmation. Remember, if the price or candle is inside the cloud, do not take any trades. Hopefully, guys, you found this video informative. If you did, please like the video and subscribe to the channel. That's all for today. See you in the next video. Best of luck for your stock journey.